Hi, in this video, we will solve example sums for hidden goodwill at the time of admission of a partner. Let's go to the first example. Example 1. Hemant and Nishant were partners in a firm sharing profits in the ratio of 3:2. Their capitals were rupees 1,60,000 and rupees 1 lakh respectively. They admitted Somesh as a new partner on 1st April 2019 for 1/5 share in the future profits. Somesh brought in rupees 1,20,000 as his capital. Calculate the value of goodwill of the firm and record the necessary journal entries for the above transactions on Somesh's admission. So let's begin by doing the working notes. Step 1. Net worth of the firm based on Somesh's capital. Is equal to the capital which is brought in by Somesh, 1,20,000, multiplied by the reciprocal of his share, which is 5/1. This comes up to rupees 6 lakh. Second step, actual net worth of the firm. We add the existing partners' capitals, 1,60,000 plus 1 lakh, and we'll also add Somesh's capital of 1,20,000, and we get rupees 3,80,000 as the actual net worth of the firm. Step 3. The goodwill of firm is equal to answer of step 1, which is 6 lakh rupees, minus answer of step 2, which is 3,80,000 rupees, which comes up to 2,20,000 rupees. And finally, Somesh's share of goodwill is equal to the goodwill of the firm, which is 2,20,000 rupees, multiplied by Somesh's share in profits, which is 1/5, which is 44,000 rupees. Solution: date, particulars, LF number, debit rupees, and credit rupees. The date of Somesh's admission, April 1st, 2019. The first entry is for the capital which is brought in by Somesh. Bank account debit to Somesh capital account. The capital which is brought in by him is rupees 1,20,000. being capital brought in by Somesh. Same date, Somesh's share of goodwill is rupees 44,000, but he does not bring it in cash. It's not specified anywhere that he's bringing his share of goodwill in cash. So we'll adjust it through his current account. The sacrificing ratio between Hemant and Nishant is equal to the old ratio, which is equal to 3:2. So Somesh's current account debit 44,000 rupees to Hemant capital account to Nishant capital account. 44,000 to be distributed in 3:2. Against Nishant, 17,600 and 26,400 against Hemant. Narration being goodwill adjusted at the time of Somesh's admission. So this is the answer to the first example in this hidden goodwill sum. Let's go to the second example. Example 2. A and B are partners in a firm. They admit C as a partner with 1/4 share in the profits of the firm. C brings in rupees 2 lakh as his share of capital. Value of total assets of the firm is rupees 5,40,000 and outside liabilities are valued at rupees 1 lakh on that date. Give necessary entry to record the goodwill of the firm at the time of C's admission. Also show your working notes. We'll begin with the working notes. Step 1. Net worth of the firm based on C's capital equal to capital of C rupees 2 lakh multiplied by the reciprocal of his share 4 divided by 1 rupees 8 lakh. Step 2. Actual net worth of the firm. We need to add the capitals of the existing partners A and B, which is specifically not given, but the value of total assets of the firm and outside liabilities as on the date of C's admission is given. So the capitals of A and B, the existing partners, will be equal to the total assets, rupees 5,40,000 minus the outside liabilities. And to this we will add the incoming partner C's capital, which is rupees 2 lakh. So we get rupees 6,40,000 as the actual net worth of the firm. Step 3, goodwill of firm. This is equal to the answer of step 1, which is rupees 8 lakh, minus the answer of step 2, which is rupees 6,40,000, equal to rupees 1,60,000. And fourth step, C's share of goodwill equals answer of step 3, the goodwill of the firm, multiplied by the share of C, which is 1 by 4, and we get rupees 40,000 as C's share of goodwill. There is no mention about the sacrificing ratio, so we will assume that the sacrificing ratio is equal to the old profit sharing ratio between A and B. Again, there is no mention as to the old profit sharing ratio. So in the absence of information, the old profit sharing ratio is equal, so it's 1:1. So the sacrificing ratio is also 1:1. Let's pass the journal entries. Solution. Date, particulars, LF number, debit rupees, credit rupees. The first journal entry is for the capital, which is brought in by C. Bank account, debit to C capital account. Rupees 2 lakh is the capital which is brought in by partner C. Narration being capital brought in by partner C. The second entry, C share of goodwill is equal to rupees 40,000, but there is no information in the question that C brings in his share of goodwill in cash. So we'll have to treat goodwill by debiting it to C's current account. We have C's current account debit C share of goodwill rupees 40,000 to A capital account to B capital account. 40,000 in sacrificing ratio 1:1. Rupees 20,000 against A and rupees 20,000 against B. Being goodwill adjusted on admission of partner C. So where the capitals of the existing partners is not specified and the value of total assets and outside liabilities as on the date of admission is given, to get the capitals of the existing partners, we have to take the value of the total assets minus the value of the outside liabilities. This will give us the capitals of the existing partners. Let's go to example 3. Example 3. X and Y are partners with capitals of rupees 50,000 each. They admit Z as a partner for 1/4 share in profits of the firm. Z brings in rupees 80,000 as a share of capital. Profit and loss account showed a credit balance of rupees 40,000 as on the date of admission of Z. Give the necessary journal entries to record the goodwill. We'll begin with the working notes. Step 1. Net worth of the firm based on Z's capital is equal to 80,000 rupees, which is the capital of Z, multiplied by reciprocal of Z share, which is 4 divided by 1. We get rupees 3,20,000. Step 2. Actual net worth of the firm we will take the capitals of X, which is 50k, plus the capital of Y, which is another 50k, plus the capital of Z, which is 80k, and we also need to add the profit and loss account credit balance of rupees 40k, and this comes up to rupees 2,20,000. Step 3. Goodwill of firm. We can take the answer of step 1, which is 3,20,000 rupees, minus the answer of step 2, which is 2,20,000 rupees, and we get the goodwill of the firm as rupees 1 lakh. The final step, Z share of goodwill. ₹1 lakh, which is the goodwill of the firm, multiplied by Z share in profits 1 divided by 4 equals rupees 25,000. Now there is no mention about the sacrificing ratio, so we'll assume that the sacrificing ratio is equal to the old profit sharing ratio between X and Y, and since there is nothing specified about the old profit sharing ratio, we'll assume that to be 1:1. So the sacrificing ratio is also 1:1 between X and Y. Let's pass the journal entries. Solution. Date. Particulars. LF number. Debit rupees and credit rupees. The first journal entry for capital, which is brought in by Z, bank account debit to Z's capital account. Capital brought in by Z is equal to rupees 80,000. Narration being capital brought in by partners Z. The second entry is for adjusting Z share of goodwill. He does not bring it in cash, so we'll adjust it through his current account. Z's current account debit his share of goodwill is rupees 25,000. 2. X capital account to Y capital account. 25,000 rupees to be divided in sacrificing ratio 1:1. 12,500 rupees against X and 12,500 rupees against partner Y. So being goodwill adjusted on the admission of partner Z. So in this sum, there was a credit balance in the P&L account representing an accumulated profit. So while calculating the actual net worth of the firm, apart from taking the capitals of the existing partners and the incoming partners' capital, we have also had to add the accumulated profits of rupees 40,000. Let's go to the fourth example. Example 4. Balance sheet of X and Y who share profits and losses in the ratio of 3:2 as at 31st March 2019 is as follows. We have the balance sheet which is given to us, the list of assets and the list of liabilities. Further, they say that they admit Z as a partner from 1st April 2019 for 1/5 share in the profits of the firm. Z brings in rupees 50,000 as his capital. Give journal entry for the adjustment of goodwill. We'll begin with the working notes. Step 1. Net worth of the firm based on Z's capital is equal to the capital of Z, which is rupees 50,000, multiplied by the reciprocal of his share, which is 5 divided by 1, and we get rupees 2,50,000. Step 2. Actual net worth of the firm we will take excess capital 48,000 plus Y's capital rupees 32,000 plus Z's capital, which is rupees 50,000, plus we will add the reserve, which is given as 60,000 on the liability side of the balance sheet. We will also add the P&L account credit balance, the accumulated profit appearing at rupees 25,000, and we will deduct the fictitious asset, which is rupees 15,000 appearing in the asset side of the balance sheet. So the answer for this is rupees 2 lakh. Step 3. Goodwill of firm is equal to rupees 2,50,000, answer of step 1, minus the answer of step 2, which is rupees 2 lakh. We get the goodwill of the firm equal to rupees 50,000. Final step. Z is goodwill. Is equal to the goodwill of the firm, rupees 50,000, multiplied by Z share in profits 1 by 5, which comes to rupees 10,000. There is no mention about the sacrifice or sacrificing ratio. So the sacrificing ratio between X and Y is equal to the old profit sharing ratio, which in this case is 3:2. So let's pass the journal entries. Journal, solution, date, particulars, LF number, debit rupees, and credit rupees. The date of admission of Z, 1st April 2019. The first entries for the capital brought in by Z: bank account, debit to Z's capital account. The capital which is brought in by Z, rupees 50,000. Narration being capital brought in by Z. Next journal entry, same date, 1st April 2019. Z share of goodwill 10,000. He does not bring it in cash. We'll adjust it through his current account. Z's current account debit. ₹10,000 to X capital account to Y's capital account. 10,000 to be divided in sacrificing ratio 3:2. Rupees 6,000 against X and rupees 4,000 against partner Y, being goodwill adjusted on the admission of partner Z. So in this sum, since the balance sheet was given with particulars regarding reserve and accumulated profit and the fictitious asset, we need to take that also into account while calculating the actual net worth of the firm.